You are listening to the Love and Money podcast with Shakira. And today I'm going to talk to you about China stocks and what's going on over in China. Are China stocks a good buy? Well, first of all, I'm not a financial advisor. I don't give financial advice. This is for educational and informational purposes only. Just want to alert you to what's going on in China because, as you know, it's not good to live in a bubble. You need to know what's going on around the world because what's going on around the world, it may or it may not affect you, but it's good to know. So, China stocks, you're probably familiar with them. If I call out some of the names, NEO is example. That's the electric vehicle version. We have the Tesla over here. So, they have the NEO. There's Alibaba, JD. There is Weibo, Sohu, BYD, Li Auto. Those are just a few names of the China stocks. And the China stocks, some of them are actually listed on the US market, making it available for people in the US to buy these Chinese stocks. So, as far as whether you should buy them or not, I'm not going to tell you whether to buy them or not, but I do want you to know that because of what's going on in China right now, it's very risky right now. So the Chinese stocks, they have been hammered within the past couple of weeks. People have seen a sharp decline in their value if you were invested in Chinese stocks at all. There was recently a slight rebound on the Chinese stocks, but what's going over there in China is that the Chinese government, they have the ability to regulate any business that they desire, and they can do it at a moment's notice. They can do it without letting anybody know and without any transparency. And so these sudden regulations, they make it more risky to buy the Chinese stocks because you never know what's going on as far as whether the government is going to decide to regulate this business or to leave the business alone. And that does affect the value of the stock if it's being strictly regulated. And so, just for an example, I'm going to give you an example of one of the Chinese stocks and their regulations. So, Alibaba is well known. That's a well known company over in China. So, in April, they were fined $2.8 billion for anti competitive actions, and they were ordered to change their practices. So, this fine, it happened suddenly. It was a government restriction regulation that they decided to do on the company. And so when they do things like that, that affects investors. It affects people who are invested in that company. And so that's what makes it risky to be invested in Chinese stocks. Um, so another example would be the company Didi, spelled DIDI, over in China. And so they had a cyber security issue. So Didi, it was in app stores over in China. And because of the government over there, they were required to remove all of their devices from the app store over there. There was a restriction on this company because they were saying that Didi was collecting information and usage, personal information that they shouldn't be collecting. So, a restriction like that, requiring you to remove everything from the app store, that's going to affect your bottom line because essentially you are no longer selling, you're no longer getting customers, and it affects the investors, their bottom line. So those are the kind of things that they're doing over in China. They are cracking down on businesses. They are fining businesses. For example, the Alibaba example I gave you, where they fined them $2.8 billion. They are regulating and cracking down on businesses like Diddy that I just mentioned. And so this is what's happening over in China. They are having strict regulations and crackdowns on certain businesses that they choose. And so this is what makes investing in Chinese stocks particularly risky, is the tight, strict regulations and crackdowns that the government can do on businesses whenever they get ready, in a moment's notice, with no notice at all and no transparency. So this is what is going on over in China. Like I said, recently there was a rebound in Chinese stocks, and the rebound happened in New York and Hong Kong and Shanghai. This was after the securities regulator said that it would support Chinese firms listed in the United States. They did see a rebound in the value of their stocks. So there is a new U.S. law that could go into effect that would force Chinese companies to delist from United States markets. Like I said, there could be a new U.S. law forcing Chinese companies to delist from U.S. markets. This is a threat that the United States is giving to China because of everything that is going on there. But the threat is not an it's not a permanent threat, because they are willing to negotiate with China, and the negotiation would happen between the Treasury Department and Beijing. So just to let you know that there are issues with Chinese stocks, and um, there are definitely things going on behind the scenes that you should be aware of as it pertains to you deciding whether you're going to invest your money in the Chinese stocks or not. So I'm not a financial advisor. I don't give financial advice. So I'm not going to tell you yes, invest, or no, don't invest. But you should be aware that there are currently problems over there in China, and you should be aware of that. And so you are going to basically do your own research, like you hear everybody else saying, but you're going to use your own wisdom when it comes to investing your money and deciding where you are going to invest your money. But I just wanted to chime in and make you aware of what's going on, and just wanted to share with you what is going on uh, in China, because you should be aware. Like I said, you shouldn't be in a bubble. You should be aware of what's going on in the world around you. So, this is the Love and Money podcast with Shakira. If you like this podcast, please share it with one other person. Also, please hit the like and subscribe button. It helps the algorithm. Thank you for listening.